Hey guys, so this is my top 5 list for indicators, which if you followed me for any length of time, this list shouldn't be a surprise. Let's start off with some honorable mentions. Honorable mention number 1 is the fractal indicator. I use this for stop losses. It removes subjectivity, it's lagging, it's slow, which is both good and bad, mainly good. It prevents you from getting stopped out too soon. It prevents you from using emotions on any dips or highs to prevent you from selling, things like that. Let's talk about it real quick. So the general idea is that during a bull trend, you shouldn't be breaking bear fractals, okay? And the names for these are opposite of what I'm going to call them, but for me, how I remember it, this is a bear fractal, up, down, up, okay? And the idea is that you shouldn't be breaking these as you're going up. So if you're going up, you shouldn't be breaking down fractals. So in this case here, if you're long somewhere in here and you just keep raising the stop to these fractals, and then you'd get stopped out here. And the same thing's the case here. If you're long somewhere in here, you just keep raising these fractals. Currently there's no fractal, so your stop's all the way down at 8,800. The same concept is true if you are trading a short. You shouldn't be breaking bull fractals. Williams calls bear fractals. And to add this to the chart, you go to indicators, you type in just Williams, and it should pop right up, Williams fractal. And I have the other fractals off, but you can turn them on, you can change the colors. I like them a little brighter, a little bigger, so that they pop out at me. The next honorable mention is something that was created by somebody else and kind of edited and adjusted by me. So this is the futures premium indicator, basically. And back in the day, 2016, futures haven't been around too long. In Bitcoin, August 2014, I think, was the first weekly future offered on OKCoin. Later on, there were quarterly and bi-weekly on OKCoin a few months following. This was sort of at the end of the bear market at that time, maybe even 2015. No, I think it was August 2014. Anyway, and it wasn't until even later than that I understood futures better, to look to see what they meant, what they were telling you. So what this is showing you how far away price is from spot, which is just the normal exchange price, versus futures, which is a leveraged price and has backwardation and contango, things like that. As far as the script for this, I will put it in the description below. But essentially what it's doing is comparing everything and giving you a histogram, line graph, whatever you want to call it, to show you where things are at. So generally, if quarterlies are way out of whack with spot, that tells you something's going on. Usually quarterlies are super emotional, just like all over the place. They're either up $300, down, in this case, $700. You can see how quickly it went from a negative, you can't have a negative premium, I guess, but $200 down to $500 up now. This is partly due to the expiration of some of the contracts, and there's a whole bunch of other stuff going on here. And then this gray one is GBTC divided by 10, so it's actually 10 times greater than this as far as the premium is concerned. And this was important when you're looking at things like the ETF odds. It held this premium for a long time, and until the ETF stuff came out, the premium sort of disappeared, and then it came back after it was pretty clear the ETF wasn't going to happen. So interesting things. I don't trade GBTC, but I know a lot of people who do. It's something to watch and to look at. We used to say it's not bullish until it's bullish in China, and the futures premium is very true and indicative of that. You can see we were negative premium here, and then as soon as we went positive, we started moving again. I can't really explain this too much, but again, you can see we're positive. As soon as we flipped positive premiums, we just skyrocketed, and I can't really explain why we weren't moving more here. But another thing you can use this for is just looking at how out of whack things are. When it's down, quarterlies are down $700. It's clearly a discount there. Something's going on. You can see that quarterlies actually reacted before spot did. So there's always a question of insider information there. So there's lots you can read into this. It's not necessarily actionable on its own, but it's interesting to look at when you're trying to make decisions based on other data other than just chart data, the general ecosystem of futures. And I'll be adding to this indicator the CBOE and CME stuff if it's relevant, if it exists for any given duration of time. I don't think it'll last very long, especially the CBOE contract. All right, let's move to number 5, and that's volume. A lot of people don't actually, I don't think, use volume or pay attention to volume as much as they should. Maybe that's wrong. Maybe just because it's like such a given that people don't always talk about using it, but they look at it. I know the first thing I do, I usually have volume off, but when I'm looking at patterns or looking at confirmations, I turn on the volume and it almost always confirms consolidation or not consolidation, or it's telling me not to go long or short, things like that. You know, when I'm seeing divergences in volume as well. If we just go to some 4-hour, you know, when you see volume descending, there's something going on. When you see this, there's something going on here. In this case, you know, we're seeing this huge ramp of selling towards the end of a move. It's an indicator for something. You know, there's always a reason. The volume is telling you something that the chart doesn't always tell you. You know, the price will move up and down. If volume doesn't react based on the price action, that tells you something. That tells you that there's likely a divergence going on. But I mainly use volume to confirm patterns because during consolidation, you should almost always have a descending volume profile. Number 4 is fibs. A lot of people either ignore them or don't know how to use them. This is how you access the fibs. Fibs here. Big thing with fibs, super simple, super easy. You go high, low, anything, high, low. That's for projection upward. So you can see we blew past this 1618 here. Another thing is, which fibs do I use? Which fibs do I pay attention to, right? Now, there are tons of options here. You generally want to use what most people are using, which isn't always the case for indicators, but for this, Bitcoin's very technical. Crypto in general is very technical. Tends to trade on fibs a lot. You can see here, you know, when it starts breaking levels, it really takes off. There were some tweets I posted following the fibs on Coinbase especially. You know, it just brings up the ladder basically, or rungs of the ladder as we're moving up. We were consolidating here, and it just keeps going, keeps going. These are just all potential reversal zones. Something to consider and look at when you're trying to figure out exits, especially in price discovery, when there's no left side of the chart to give you that resistance. The fibs will help you do that. Number 3, the pitchfork, which has really exploded in my trading tool belt as of last year, year before. I don't even know. I think, you know, the big thing I stumbled upon it because it was always sitting here on this bar, and I'm like, what is this thing? I've never used it. So then I looked it up, and what it does is it uses 3 points on a chart, anchor points, and typically you go extreme high or low, and then a high or low, and that gives you a range, a zone, a channel, diagonal potential reversal zones, very similar to fibs. In this case, if you want to edit the numbers, I usually don't. I usually stick to whatever the default is. Sometimes I'll change the outer wings a little bit if you want to add stuff like that. I mean, in this case, the 1.5 works. But generally, it might seem like curve fitting to a lot of people, but what I'm doing is looking for zones that are respected in multiple places. So I'm looking to see whether or not the median line, which is mean reversion, which is where price should be sitting most of the time, based on the trend, I'm making sure price is there most of the time. I'm making sure the middle band is respected. I'm making sure that highs and the lows are respected. You know, so this pitchfork, it literally takes 2 seconds to draw. If you want to get super specific, you could turn on, this is a magnet tool, and it'll lock your cursor to the wicks, things like that. If you want to get like pinpoint accuracy on this. So you can see if I would have drawn this, as soon as this high-low is happening, it gives me predictability and actionability for orders. Again, when I don't have the left side of the chart to give me that resistance. Number 2 on the list, Bollinger Bands. You know, it's amazing learning about Bollinger Bands and then meeting and talking with John, the man Bollinger, not only on Twitter but now on Telegram. Great guy, lots of resources, lots of free resources, highly recommended. So to add Bollinger Bands, you just go to indicators. You just type in bands probably. Yeah, Bollinger Bands. There are some other stuff that go along with Bollinger Bands. I won't talk about it on this video. But what Bollinger Bands essentially are the volatility of price based on standard deviations from previous price. There's also a simple moving average in here that sort of gives you the bullish or bearish bias. So if we're trending above the moving average for an extended period of time, it's usually representative of bullish price action upcoming. A lot of times you'll see, here's kind of a good example of that, you'll see these fake outs where we start to break and then go the opposite direction, which makes it hard to not only explain and learn Bollinger Bands and how to use them actionably, but to trust them. So you kind of just have to know that that exists and go with it. But Bollinger Bands are especially useful when triangles are forming. Again, I'm removing subjectivity completely. I'm using math. I'm using things I don't have to think about to draw stuff on the chart for me. This draws where the triangle is likely ending, okay? You'll see several periods of squeezes within this. If you don't understand anything I'm saying, I have a separate Bollinger Band video. Check that out. But what this is doing, we can draw triangles all we want, right? And I can move lines around. But at the end of the day, if I can just use math to help me predict what's going on here, much easier, much better. It removes my, ETH-loving ways, or ETH-hating ways in my case, from making an actionable trading decision. And the #1 indicator of all time, not only of 2017, obviously if you know anything about me, Ichimoku Cloud. A little bit about Cloud. So I heard about Cloud first on a Bonavest hangout back in the day, probably 2014. That's an older name. That's throwing it back. Bonavest and BTC Bix talking about the cloud, the Ichimoku Cloud. The reason I liked the cloud initially, it looked very complicated, looked difficult to understand. I like difficult problems. I think most of us involved in this space have a mind for difficult problems and thinking about things in ways that can also be difficult to understand initially. But the bottom line for Ichimoku Cloud is it's all about trends. It's all about the beginning and ending of a trend. It's all about complete actionability on everything. There's so much on the cloud that I talk about all the time on Twitter, and there's a lot I don't talk about that's also there. Plenty to learn, plenty to look at. I won't talk about it in this video, but there are tons of other videos I've done, so check that out. So those are my top 5 indicators. Really, I don't use that much stuff. I see a lot of people with all these oscillators on their chart, Stoke and RSI and MACD, OBV, whatever. I keep it bare bones, and I think that's for the better for most people, because you don't want analysis paralysis when you're deciding on thousands of dollars or more at a time on a trading position.